A very good afternoon. We will be starting our session in a couple of minutes. Today our topic is blocked credits in GST. So we are going to analyze all the items of blocked credits in detail. We will be starting the session in a couple of minutes. Participants are joining in, so probably in 2 to 3 minutes we will start our session. We will be starting session in 2 minutes. We are going to start the session in another 2 minutes. Participants are joining in. We are just starting in a minute. Yes. So we will start our session. Today's session is detailed analysis of blocked credits in GST. Now, if you say from the input tax credit angle, the scope of input tax credit is quite detailed and enlarged in GST. Section 16 subsection 1 says any credit of goods or services basically which is used in the course or furtherance of business is eligible to be claimed as credit. So predominantly, if you see, we can claim input tax credit on input services, and as well capital goods, provided they are used in the course or furtherance of business. Now, what is this business? What is this course or furtherance of business? If you see in the GST law, the furtherance word is not defined. What is in the course or furtherance? This word is not defined in the GST law. However, the word business is defined. The word business is quite broadly defined in the GST law. Now, let us look at the precedent law, erstwhile law, central excise and VAT credit rules, to understand what were the definitions of input and input services. So if you see in my slide, in the earlier law, input meant all goods which are used in relation to manufacture of final product for providing output service. So there was a nexus which was required. There was a direct nexus which was required in terms of your output product or output service. But if you see in GST, it is a very wide term which is used, which is in the course or furtherance of business. Because of this wide term, lot of items on which we are able to claim input tax credit in GST, but except those blocked credits. Section 17 subsection 5 says which are those blocked credits on which we cannot avail input tax credit. So in this session, we will be discussing all those, majority of them, those which are blocked under section 17 subsection 5 with various examples. I'll be discussing even lot of advanced rulings during the course of my presentation. Although advanced ruling as per section 103 applies only to the respective applicant and the jurisdictional officer, still I am going to discuss in my presentation, because advanced ruling predominantly gives a view how the officers of the GST are reading the law or comprehending the law. So it helps somewhere in the compliance procedures. So that's the reason I have predominantly taken a lot of advanced rulings which I'll be taking during the course of my presentation. Now, in the course or furtherance, although it is not defined, but just to give an instance, there was a famous Bombay High Court judgment in case of Coca-Cola. In case of Coca-Cola, what happened was Coca-Cola was manufacturing concentrates, and these concentrates they were supplying to their various franchisees. Now, these franchisees used to manufacture Coca-Cola with that concentrates and used to sell it. Now, Coca-Cola, which is manufacturing those concentrates, used to do a lot of advertisement of Coca-Cola product. So in that case, the department said this input tax credit on the advertisement expenditure cannot be claimed because Coca-Cola is manufacturing concentrates, whereas they are advertising the product of Coca-Cola, which is the finished product and not the concentrate. But the case went to Bombay High Court, where they ruled that input tax credit will be allowed, because only if Coca-Cola advertises its product, which is the finished product, final product Coca-Cola, their franchises will purchase more concentrates from the Coca-Cola company. So input tax credit was being allowed. If you say this judgment came in the erstwhile regime, and in the GST regime, the definition is too wide. They have said in the course or furtherance of business. So definition, the GST law is quite wide and broadened, and that is the reason we say anything incidental, ancillary to the main objective also to conduct business, all those items will be eligible to claim as input tax credit. So without wasting further time, we will start on our main topic, which is block credit, section 17 subsection 5. So it starts with the non-obstant clause, which is notwithstanding anything. Section 17.5 starts with the non-obstant clause, notwithstanding anything. That means although it might be, an item might be used in the course or furtherance of your business, still if it comes under section 17 subsection 5, the credit will not be allowed. I repeat, although an item might be eligible credit as per section 16 subsection 1, it might be used in the course or furtherance of your business, but if it comes under section 17.5, it will not be allowed as credit because it starts with the word notwithstanding anything. So it says notwithstanding anything contained in subsection 1 of section 16 and subsection 1 of section 18, input tax credit shall not be available in respect of the following. Now, what are those items? We will see one by one. First is input tax credit shall not be available in respect of the following, namely, motor vehicle for transportation of persons having approved seating capacity of not more than 13 persons. So if you see in the first line, they have said transportation of persons. That means if it is transportation of goods, credit will be allowed. The wordings were a little different prior to 1st February 2019, after which there was an amendment. So here the words used are motor vehicles for transportation of persons. So if a motor vehicle is used for transportation of goods, credit will be allowed. Example, if I purchase a truck, a tempo for transportation of my goods, then input tax credit will be allowed. So the restriction is only with respect to motor vehicles which are for transportation of persons, having a seating capacity of 13 persons. So that means if the motor vehicle has a seating capacity of up to 13 persons, input tax credit will not be allowed. But if it is more than 13%, ITC will be allowed. Now, this amendment also came from 1st February 2019, where the new amendment, GST Amendment Act, came in from 1st February 2019. Prior to that, there was no 13 seats. It was mentioned motor vehicles credit will not be allowed. But now it says only up to 13 seats it will not be allowed. So example, if I purchased a bus for transportation of my employees, then input tax credit will be available if it is more than 13 seats. So ITC is will be restricted only for motor vehicles if the seating capacity is up to 13 persons. So let's say I'm a manufacturing company or I'm a software company. To transport my employees, I purchase a bus, I purchase a tempo traveler, I purchase a vehicle which is more than 13 seats, then I will be allowed input tax credit. I will not come under this blocked credit scenario because my motor vehicle is more than 13 seats. Now, the next point here is if it is 13 seats, ITC will not be allowed. But except an exception is carved out here also, except when they are used for making the following taxable supplies, namely. So what they are trying to say here is if a motor vehicle is up to 13 seats, then also ITC can be claimed in the below 3 scenarios. I repeat, up to 13 seats, ITC will not be allowed. But there is an exception that if a motor vehicle is up to 13 seats and if it is used for the below 3 purposes, ITC in that cases will be allowed. The first scenario is if it is used for further supply of such motor vehicles. Further supply of such motor vehicles. So if I am purchasing motor vehicles for further supply, then ITC will be allowed. An important point to note here is generally what we think in common parlance, further supply means further sale. That means I should be in the business of buying and selling motor vehicles. No, if you see supply is defined as supply includes sale, transfer, barter, exchange, license, rental, lease, disposal, section 7(1)(a). So if you see, even if I rent out, this is still further supply of such motor vehicles. So generally we should not think it is purchase and sale. Further supply means supply is defined widely in section 7(1)(a). So even if I'm renting out, I should be allowed input tax credit. So the first exception is even up to 13 seats. If I'm using it for making further taxable supplies. One is further supply of motor vehicles, ITC will be allowed, or transportation of passengers. So if I'm using the vehicle, I'm purchasing motor vehicles for providing further taxable supplies of transportation of passengers. So I'm in the business, let's say example, a factory, they hire my services for transportation of their passengers. So I run an agency, I run my office wherein I purchase vehicles and I provide transportation services to their management, to their employees, etc. In that case, if I'm using those motor vehicles for transportation of passengers, then I will be allowed input tax credit because I'm using those vehicles for further supplies. So if I'm in that business, I'll be allowed input tax credit. Third criteria is imparting training on driving such motor vehicles. So basically, if you see, we have a lot of driving schools which teach how to drive motor vehicles. In those cases, even if it is up to 13 seats, input tax credit will be allowed in that scenario. So to summarize, motor vehicles up to 13 seats, ITC will not be allowed. for transportation of persons. Any vehicle for transportation of goods, ITC will be allowed. There is no restriction. For persons up to 13 seats, it will not be allowed. More than 13 seats, it will be allowed. Third point is, even if it is up to 13 seats, it can be allowed provided it is used for further supply of motor vehicles, transportation of passengers, or imparting training on driving such motor vehicles. Now, what is a motor vehicle? If you see, it is not defined in the GST law as to what is a motor vehicle. We traveled to the Motor Vehicles Act, where section 2 subsection 88 of Motor Vehicles Act defines what is a motor vehicle. So in the screen is the definition. As per Motor Vehicles Act 1988, motor vehicle or vehicle means any mechanically propelled vehicle adopted for use upon roads where the power of propulsion is transmitted thereto from an external internal source, etc., etc. And the last two lines reads as, or a vehicle having less than, if you see the last fifth line, but does not include a vehicle running upon fixed rails, or a vehicle of a special type adopted for use only in a factory or in any other enclosed premises, or a vehicle less than 4 wheels with engine capacity of not exceeding 25 cc. So why I'm trying to read this is, if you see, when you talk about a two-wheeler, can we avail input tax credit on a two-wheeler? So for that, if you see, I will be able to take credit on two-wheeler only if it is up to 25 cc. If it is more than 25 cc, I will not be able to claim credit because that will still fall into the definition of motor vehicle. Probably to my knowledge, I don't think in today's terms, we get any two-wheeler which is less than 25 cc. So any purchase of two-wheeler, we will not be able to claim credit because that will also fall into the definition of motor vehicle. Now coming to one of the advanced ruling. Authority for advanced ruling, AAR, Madhya Pradesh, in the case of nursing transport. The facts of the case was the appellant was engaged in providing GTA service, transportation service, and he was under the option of forward charge, where he was charging 12% GST on the forward charge to all their customers. And they were availing all their ITCs on insurance, repair, etc. Now that applicant recently purchased cars and he gave on lease rent to various companies. So his question raised was, can I avail input tax credit on purchase of cars? Please do post your answers. Okay, so some have said that the slide is not visible. Whether my slide is now visible? Please, if someone can comment whether my slide is visible to you all now. Please post in the chat box whether my slide is now visible, my PPT. Okay, I think now my PPT is visible. Okay, fine. Thank you. Thankfully, I just noticed the chat box in my, yeah. So anyways, I just took only 2 slides. We are almost in the 3rd slide only. So as I was just explaining you, first was motor vehicle, which I explained you very clearly. There are 3 important points to be noted. And I've just come to the advanced ruling. So almost 2 slides only we have covered as of now. So if you see in this advanced ruling, nursing transport, they were providing GTA service and they were under forward charge. They were charging 12% to all their customers and they were availing input tax rate also. They raise a question that they are purchasing cars and they are leasing out to their customers. So they raised the question whether they can avail input tax credit on purchase of car. Now, if you see here, okay, first let me ask the participants to post their answers. What do you feel in this case? If I purchase cars and I lease out to various companies, can I avail input tax credit? Okay, so participants have answered yes. So if you see here, in this case, I can avail input tax credit because Just few minutes back, I told if it is up to 13 seats vehicle, I can claim ITC provided three conditions in three scenarios. One, if it is for further supply, right? So this is for further supply because these vehicles I'm supplying it further and I'm giving on lease rent and I'm charging GST. So since it is used for further supply, I will be eligible to claim input tax credit. So the question was, can GST paid on these cars will be available as ITC? So as we discussed, as many of the participants also said, it was said that ITC will be eligible on this purchase of car since it is used for further supply of vehicles. However, this has said that the vehicle must be registered for commercial use and permit holder as per the Motor Vehicles Act. So in a nutshell, so this advance ruling was a welcome move. They rightly said that if a motor vehicle is used for further supply, then ITC will be eligible. My another question, if you see many factories, they will have crane or they will have JCB, dumper, tipper, not to move the goods from one place to another inside the factory. So my question is, can we claim input tax rate on those vehicles? If you say JCB, dumper, tipper, let's say in the case of works contractor, or no, generally I'm asking, can we claim input tax rate? If I'm a factory, I'm using a vehicle to move goods from one place to another, to my the place of manufacturing to the place of stockyard inside the factory. So what do you feel? Can I avail input tax credit on these items? Please keep posting your answers so that we will have little interaction during the session. So it will be interesting for all of us to discuss those case studies. If you see, the answer here is we will be eligible to claim credit because, as I said some time back, for transportation of goods, we can avail credit. And second reasoning can be, this is, if you see, this is not for, this is for transportation of goods. And as I said, transportation of goods, movement of goods, I can avail credit. The restriction is placed only for transportation of passengers. So in these cases, I'll be able to claim credit. Also, there is an advance ruling. In the advance ruling, the advance ruling, it was raised by an applicant asking, can I avail ITC on JCP, dumper, tipper, etc.? And the ruling said, yes, you can claim ITC. So it was a right ruling which came and they allowed ITC in that cases. Now, I have two advance rulings of the same applicant, same company, Chowgle Industries Private Limited. Same company having branch in Goa and Maharashtra, they applied advance ruling in both the places. I repeat, this entity, Chowgle Industries Private Limited, they applied advance ruling. They have operations in Maharashtra and also they have operations in Goa. They applied advance ruling in both the state. Here, the answer in both the ruling, both the states was same, that ITC will be allowed. But incidentally, the reasoning given in the advance ruling was different. The logic, the reasoning given by Maharashtra AR was altogether different from the reasoning given by Goa AR as to why credit should be allowed. But answer was same. It said credit will be allowed. So the fact was, demo car is used for transportation for a limited period. So the entity was, they were selling motor vehicles. So what they will do is they will procure demo vehicles for demonstration purpose. So the applicant said, we use these vehicles for demo purpose in our showrooms, and we generally retain is for period less than 2 years or 40,000 kilometers, whichever is less. And we use this only for a period of 2 years, and then we dispose of the vehicle. We sell the vehicle and pay GST on the sale value, whatever sale value it is there. So the facts were almost similar in both the rulings in Maharashtra as well as Goa, since it was the same company. So the question was, on these demo vehicles, can input tax rate be claimed? That entity will generally capitalize. They said in the facts that these demo vehicles, we capitalize in our books of accounts. Since if you are buying for purchase and sales on a day-to-day business, it will be accounted as stock. But this was for demo purpose. So the applicant said we capitalize in our books of accounts. So the question was, can they claim input tax credit? So what do you feel? Can ITC be claimed in such scenario? Now, if you see here, Maharashtra AR said, since it is used for making further supply, since it will be further supplied at a later date, because the applicant said after 2 years, we will sell it and pay GST on the sale value. So advanced ruling authority, I think this was a weird reason based on which the ruling is given, because at the time of procurement only generally we see the intention, the usage. But in the ruling it said, since after 2 years you are going to supply, it is for further supplies and hence ITC is eligible. Goa Advanced Ruling Authority said, demo vehicle is indispensable tool for promotion of the sale. Hence, this is capital goods used in the course of furtherance of business and hence ITC is allowed. So although in both the advanced ruling authorities, they allowed the credit, but reasoning given was altogether different in both the rulings. Now, another question is, MRP Limited purchases a 13-seater bus for transportation of employees from their respective houses to factory. Assuming the vehicle cost is 20 lakhs and GST charge is 28%, amounting to 5,60,000, can ITC be availed by MRP Limited? So maybe MRP Limited is, let's say, manufacturing tires and they procure a vehicle for transportation of their employees. So can they avail input tax credit on the purchase of this motor vehicle? Question is, can they avail input tax credit on the purchase of this motor vehicle? Okay, so if you see here, answer is input tax credit cannot be claimed because it is up to 13 seats. As I said, up to 13 seats, ITC cannot be availed. If it is more than 30 seats, ITC will be available. Next question, as I already discussed, purchase of two-wheelers. Purchase of two-wheelers. Someone has posted in the chat box that PPT is not visible. I think it is visible because I can see in my, I have just parallelly opened it in my mobile phone and I can see that it is visible. Yes. So other participants have also said that it is visible. Yes. Okay. So if two-wheeler is purchased, ITC cannot be claimed. As I said, it is included in the definition of motor vehicles and hence ITC cannot be claimed if I purchase a two-wheeler because it will come under the definition of motor vehicles. Now coming to an appellate authority for advanced ruling decision in case of Maharashtra, it was, the applicant name was CMS Infosystems. So if you see, the facts of the case were the applicant CMS Infosystems is in the business of transportation of cash. No, the various ATMs, they will load the cash, so they will transport cash. So the question raised by them was whether cash will be treated as goods, because if it is used for transportation of goods, credit is allowed. So the question raised in the ruling was, since they use the vehicle for transportation of cash, will credit be allowed on the presumption that cash is goods in that case? So appellate authority for advanced ruling said ITC will not be allowed. First, advanced ruling authority said it will not be allowed. Then the applicant approached appellate authority. Appellate authority also said it will not be allowed because cash is not goods. However, the same was remanded by the Bombay High Court for non-consideration of the submissions that the money is not the good in the business of carrying cash vans. Now, however, this ruling is not relevant as on today, in my opinion, because earlier the law was worded that differently. From 1st February 2019, it says ITC will not be available on motor vehicle used for transportation of passengers. Vehicle used other than passengers, ITC will be allowed. So in present scenario, whether cash is goods or not, I'm not getting into that litigation at all. Cash is whether goods or not, ITC will be eligible today because the law reads as motor vehicle for transportation of passengers is not allowed. Here, this is other than passengers. So irrespective of whether it is goods or not, ITC will be allowed post the amendment of 1st February 2019. Hope you are able to appreciate the reasoning why I'm saying it will be allowed today. Next, in the case of vessels and aircraft, if you see in the case of vessels and aircraft, almost same reasoning. It said vessels and aircraft ITC will not be allowed except when they are used for making following taxable supplies. Namely, if the vessels and aircraft are used for further supply of vessels and aircraft, it will be allowed. If it is used for transportation of passengers, ITC will be allowed. If it is for imparting training or navigating that vehicle, flying aircraft, it will be allowed. So same kind of reasoning, if I'm using for further supply and transportation, credit will be allowed in vessel and aircraft also. One question, let's say a big corporate, a big MNC, they purchase an aircraft for their own use. The management that travels from one place to another, so they have an aircraft. So will the company be able to claim credit on this aircraft? Answer is no, because only if it is for this below port purpose, ITC will be allowed in my opinion. Next item is services of general insurance, servicing, repair and maintenance insofar as they relate to motor vehicles, vessels or aircraft referred to in clause A or AA above. That means in case of insurance, let's say example, I have a motor vehicle. Let's say a motor vehicle for more than 13 seats. On that, if I claim an insurance, I have an insurance policy, I pay premium. On that premium, GST is charged. I send my vehicle for repairs and maintenance, and GST is charged on the repair bill. On all these items, can I claim credit? It says if ITC is allowed on vehicles, then you can claim ITC on repair and insurance also. So in a nutshell, if I take insurance or I do repairs of my motor vehicle up to 13 seats, on which generally I cannot claim ITC, credit on insurance and repair also will not be eligible. However, if I take insurance or I do repairs for vehicles more than 13 seats, ITC will be eligible. Or let's say example, I am manufacturing carton boxes, or I'm manufacturing laptops, I'm manufacturing electronic goods, and I purchase a truck for transportation of my goods. Then for that truck, if I take an insurance, if I do any repairs, let's say I replace the tires, repairs cost, insurance cost, on all these GST, I will be eligible to claim credit. So to summarize, if credit is not allowed on the vehicle, insurance, repair on these bills also credit will not be allowed. However, if ITC allowed on those, then on the repair and insurance also ITC will be allowed. Yes, many participants have rightly answered. In this case, more than 13 cents, ITC will be allowed. Now, one question to be raised. If you see, many SSCs are having their department audits being conducted. Now, GST audit is being done for financial 18-19 because the due date is extended further. So when we are doing GST audit for 18-19, many taxpayers would have claimed credit prior to 1st February 2019, because this clause of insurance and repair is inserted with effect from 1st February 2019. Before 1st February, this clause was not there. So let's say a taxpayer, an SSC has taken insurance or repair on their car, which is 4 seats or 5 seats, on April to January 2018-19. Can credit be availed during that period? Because I said this restriction has come only from 1st February 2019. My view is prior to 1st February, ITC should be allowed because this restriction was not specifically there. And the word used in the earlier prior to 1st February was in respect of motor vehicles. It said ITC will not be available in respect of motor vehicles. Now, in couple of Supreme Court judgments, they have discussed in detail what is this in respect of. They have said in respect of is like on. So credit is not available on motor vehicles. In that case, if we detailedly analyze this word of in respect of, then ITC should be available on repair insurance, because repair insurance is not even goods. When I procure motor vehicles, it is goods. I purchase motor vehicles. In case of insurance and repair maintenance, this is a service transaction. ITC is not available on purchase of motor vehicles. On these items, I should be allowed credit prior to 1st February. No doubt, but that will be subject to litigations in future. But my personal view is ITC should be allowed prior to 1st February 2019, because there was no specific restriction prior to 1st February 2019. Next, ITC is not available on food and beverage. So restaurant, dealers meet, AGM. So company might have an AGM. So they might call for a catering contract, or they might have food arranged. Example, sales team, marketing team might go in a hotel and they have a dinner there or lunch there with their clients and customers. On that food bill, ITC cannot be claimed. Food and beverage, ITC is not available. Next, outdoor catering. Example, like I was saying, we have an AGM meet, we have a dealers meet, and let's say in our office, we have a meeting with our employees, and we call our dealer customers. We arrange food from outside, outdoor catering. So the outdoor catering gives us an invoice. ITC is not allowed on outdoor catering. Next, beauty treatment, ITC is not allowed. Let's say example, um, uh, any company which they encourage, no, they arrange beauty treatment for their employees, for maybe they're into advertisement services or some specific industry where they need beauty treatment services for their employees, female employees. ITC is specifically blocked. Health service, ITC is blocked. Let's say example, in a company, the company arranges health check, master health checkup for employees. In that case, health service, ITC cannot be claimed. If they do a health checkup for their employees, ITC cannot be claimed on that. Cosmetic and plastic surgery, ITC is not eligible. If you see, the further portion says leasing, renting or hiring of motor vehicles, vessel or aircraft as referred in clause A and AA. So if you see, leasing, renting and hiring of motor vehicles, credit is not allowed. I repeat, leasing, renting or hiring of motor vehicles, input tax rate is not allowed if it is up to 13 seats, because they said as referred to in clause A and AA. So here also what they are trying to say is, if ITC is allowed on procurement of purchase of vehicles, then their leasing and renting also will be allowed. But if it is up to 13 seats, like ITC is not available, in that case, leasing, renting, hiring of motor vehicle up to 13 seats, ITC will not be eligible. So basically same logic of clause A, purchase of vehicles, same logic is applied here also. Similarly, we saw same logic was applied in case of repair and insurance. Example, I take Ola or lease for 2 days for use of my employees, or let's say for an outstation visit of my employees. In that case, ITC will not be eligible, because leasing, renting, hiring of motor vehicles, ITC is not allowed, subject to it as referred in A and AA. Next, life insurance, health insurance, ITC is not allowed. Let's say example, for my company, I take health insurance for my employees. I take life insurance for all my employees. As a perquisite, as a benefit to all my employees, I take insurance. ITC is not allowed on the premium paid by me to the company, insurance company. ITC is not allowed. Now, for all these above clause, they say, for the above three clause, they say it will be allowed, only exception is given when the credit on this food, beverage, leasing, insurance will be allowed. It says if goods or services or both are used for making outward taxable supplies of the same category or part of composite or mixed supplies. So if I'm using these items as part of my composite or mixed supplies, I will be allowed input tax credit. I will give you multiple examples to show the essence of this last paragraph in my slide. Allowed if it is used as part of my composite or mixed supplies. Now, event management company uses the services of rent a cab for pickup and drop of guest performers at the event where ITC is allowed. Now my question here, if you see, event management company gets a contract, let's say from a manufacturing company, large conglomerate, for an event to be held. So let's say I'm the event management company and I get a wholesome contract for organizing the event. Now, for organizing that event, I might hire cab services for transportation of the company's guests, customers and dealers. So I will provide a wholesome services of stay of the guest, travel of the guest, flight tickets of the guest, arranging cab for the guest, arranging the venue for the guest, food for the guest. So when I raise invoice to the ultimate client, I will be allowed input tax credit on the hiring services of motor cab, because it is used by me, the motor vehicle, the leasing or renting of services are used by me as part of my mixed or composite supplies. I hope you are able to appreciate this point. If it is allowed as part of my mixed or composite supplies, ITC will be allowed in that case. One question is raised whether ITC will be allowed in case of health insurance if it is mandated by any law in force. Yes, sir, I will come to your point in just few minutes. I will come to your point. So event management company, as we discussed in the example, ITC on this cab will be allowed because it is used as part of my composite or mixed supplies. Next example. probably maybe you can itself answer this question since I've explained the provision. ABC Training Academy conducts a GST training for which it levies rupees 1000 per participant. The hotel will charge meal expenses to ABC plus GST, for which can the academy claim input tax credit? I repeat, the question is ABC Training Academy is conducting a GST training for participants and they charge 1000 rupees per participant as entry fees. So they organize this training in a hotel. When the hotel raises the bill on ABC Training Academy, charging GST on the meal expenses. So can ABC Training Academy claim input tax credit on that food bill charged to them? Let's say there were 50 participants. So they had a collection of 50,000 from the participants, 1000 rupees per participant. And the meal was charged by the hotel to them. Can they avail input tax credit? So one of the participants has said, no, ITC cannot be claimed. So what is your view? Can ITC be claimed in this question? See, I'm trying to go more in the nitty-gritties of it because we are trying to go in depth of these block credit provisions. Now, if you see here, answer is ITC will be allowed in my view because it is used as part of my composite or taxable supplies. I am in the business of training, not me. Let's say example, this ABC Training Academy in this given example. It is in the business of training. Since it is a business of training, they're using these food services to provide training services to their clients, participants, and they're charging fee also to them. So it is used as part of their composite taxable supplies and they're charging GST also on the output. So the credit should be allowed in my view because it is used as part of the taxable or composite supplies. Okay, some of the participants have said no, but as I said, sir, so the logic is they are saying it is not allowed, but if it is used as part of my taxable composite supplies, we discussed the event management example where they are charging GST on the output service and it is a part of the composite or mixed supply, the CAP service. Similar in case of training service for ABC Training Academy, the food was as part of their composite mixed supplies and they were charging output GST also. So in that case, it becomes a part of your composite mixed supplies and ITC should be allowed in that case. That is my view. Yes, definitely some might say that yes, it is not allowed still. Next is MRP Limited conducts a sales meet for their prospective customers. The hotel will charge meal expenses to MRP Limited, for which can MRP Limited claim credit? In two scenarios, my question is, see, since they are conducting sales meet from customers, they are not going to charge even a single penny from the customers because it's a promotional event. But the hotel will charge bill to MRP Limited. You can take this as an AGM meet, dealers meet, any business event conducted by any company. So it applies to all the scenarios. So first case, if the hotel levies rupees 1000 per meal, can MRP Limited claim input tax credit? So Karthik sir has answered it. It is based on invoicing, right, sir? So first case, if you see, if hotel levies rupees 1000 per meal, ITC cannot be claimed because towards food and beverage, ITC is disallowed. And this is not used as part of my composite or mixed supplies because I'm not charging anything to my customers here. Next scenario, if you see in my slide, is if hotel levies 600 rupees towards meal and balance 400 rupees towards hall rent. In that case, if you see hall rent ITC, I can claim, but that 600 rupees towards meal, I will not be allowed credit. So it depends on, like it is said in the chat box also, it depends on the invoicing. Some hotels generally don't charge any amount towards hall rent. They generally charge only meal per plate and you can take hall on rent on free. Basically, the hotels charge only on meal expenses per plate, let's say 1500 rupees or 1000 rupees. Even luxury hotels charge, many hotels charge on per plate basis, per meal basis. So in that case, the entire ITC will be disallowed. If a hotel segregates the amount towards hall rent and toward meal rent, then towards hall rent, ITC should be allowed and towards meal, ITC will not be allowed. Now, next, we are going to discuss an interesting advanced ruling authority. In case of West Bengal, Mohana Ghosh, which is dated 25th June 2019. The applicant submits that she supplies rent-a-cab service as defined in the Finance Act. So in this case, applicant is providing rent-a-cab service. Now it says the applicant has referred that ITC should be allowed on purchase of motor vehicles because it is used by her for passenger transportation service. So the applicant said I should be allowed ITC because I'm using purchase of motor vehicles for further transport, further for passenger transportation service. So ITC should be allowed. Now if you see here, the appellate, the advanced ruling authority has analyzed this, and they said, based on the facts given, this is not passenger transportation service. They said it is classifiable as renting of motor vehicle because they are charging on hourly basis and not on kilometer basis. Generally, passenger transportation service is charged on kilometer basis, but here it is charged on hourly basis. So the ruling authority said this is not transportation of passengers, but whereas this is renting of motor vehicle, and hence ITC will not be allowed. I repeat, the ruling authority said ITC will not be allowed because it is not for transportation of passengers, but where it is renting of motor vehicle. Now, can the participants answer whether do you agree with this ruling? Will ITC should be allowed or not allowed in this given scenario? I repeat, the question was Mona Ghosh, the applicant, she submitted that facts that she is purchasing motor vehicles for renting services. She's using transportation of passenger services, transportation of passengers, passenger transportation service. So credit should be allowed. The authority said, based on the fact that it is not passenger transportation service, but she's providing renting of motor vehicle service, which is under the SSC code of 9964, whereas passenger transportation service fall under 9966, and hence ITC is not allowed. What is your view whether ITC should be allowed or should not be allowed? If you see in this ruling, very interesting ruling, if you see in this ruling, they have not touched upon another point, which is, see, although it is not passenger transportation service, fine, but there is another clause which we saw, which was further supply of motor vehicles. So if you see here, I mean further supply, whether it is renting, whether it is passenger transportation, in that clause I could have taken a relief, but probably maybe the applicant has also not put forward those facts that it can be also treated as further supply of motor vehicles, because as we discussed earlier also, I discussed another advanced ruling also, if I'm using for further supply, which can be sale or renting or leasing, then it should be allowed as ITC. But here the applicant was specific on the point of passenger transportation. Advanced ruling authority said it is not passenger transportation, it is renting, and hence ITC is not allowed. But in my humble view, ITC should have been allowed on the another point, on another footing, stating that it is for further supply, and ITC should have been allowed in this case. Next, ITC is not allowed on membership of club, health and fitness center. That means, example, let's say a company says its employees that, okay, I will provide you gym subscription. My employees, let's say in the accounts team, lot of pressure, lot of work pressure because of GST. So they are given an additional subscription of a gym. They can go to a gym on every day. The subscription is paid by the company. On that invoice, GST cannot be claimed because membership of health, club and fitness center is specifically blocked. Travel benefits extended to employees on vacation. So let's say once coronavirus pandemic, let's say this pandemic is over, a company says their employees, some of the employees, that okay, on a vacation you all can go to, let's say, a trip to Goa. So on the trip to Goa, those expenses will be borne by the company, but all those expenses, ITC cannot be claimed by the company entity because specifically blocked under this clause. Now, this clause B, which was too wide, which said food, beverage, leasing services, health insurance, life insurance, which further said membership, health, fitness center, it is not allowed. But there's a proviso attached to this point number B, which says, provided that one of the participants has also raised a question, can I claim credit on health insurance if it is mandated by law? Here comes the answer. It says, provided that input tax credit in respect of such goods or services or both shall be available where it is obligatory for an employer to provide the same to its employees under any law for the time being in force. So thereby, if I am providing any of the above goods or service to my employee because it is mandated by law, then ITC should be allowed in those scenarios. So I've just given an example. A company handling explosive products takes health insurance for its employees because it is mandated by the law. In that case, ITC will be allowed on those health insurance. Now, let's discuss this scenario on the present. No, in the present scenario, this situation, this clause, because currently we have this pandemic going on, COVID-19 pandemic. So, MHA, Ministry of Health, Home Affairs, Ministry of Home Affairs have issued various guidelines in the last 2 to 3 months under Epidemic Diseases Act 1897 and Disaster Management Act 2005. As per their guidelines, they have mandated health insurance for employees. They have also said major requirements like there should be use of mask in the premises, office premises also, installation of thermal scanners at the entry of the office, frequent sanitization should happen at the workplace, further supply of hand sanitizers, soap and running water in the washrooms, special transportation of facilities for workers coming from outside to reduce dependency on public transport. So all these guidelines have been made mandated by MHA through various guidelines. So in that case, if it is mandated by law in the above clauses, I'll be able to claim input tax credit. So see, we have series of judgments also on all those footings. So because it is used in the course of furtherance of my business, plus it is mandated by law. Now if you see, now if someone asks, can I claim input tax rate on the mask, sanitizers purchased at our office, because a lot of corporate companies are having various thermal scanners are being purchased at the entry point. Employees are being scanned when they are entering the office, masks, sanitizers. So in my view, ITC should be allowed on all these cases because it has been mandated by the MHA guidelines. However, regarding medical insurance, if you see the latest guidelines issued by MHA on 30th May, health insurance is not stated anywhere. Whereas one of the earlier guidelines dated 15th April, in that they had mandated medical insurance. So in my view, after 15th April, based on those guidelines, if someone has taken medical insurance, ITC should be allowed. But if someone takes after the next guideline, in which health insurance clause is missing, then ITC might not be allowed. So that is my humble view, my personal view. But no doubt, we might have some litigations in future. But in my view, since it is mandated by law, by Ministry of Home Affairs, under the Disaster Management Act 2005, so it is under a law, it has been mandated. In that case, ITC should be allowed. So I hope one of the participants raised a question. So this should answer this question, that can insurance credit be claimed on the health insurance? But as I said, you can check when the insurance is taken. In my view, if it is taken after 30th May, ITC might not be allowed because the guidelines on 30 May will prevail over the previous guidelines. Now, coming to the next item, which is works contract service. So this is one of the most interesting items. I will read the next entry also because clause C and clause D are almost similar. Works contract service and construction service. So this says works contract service when supplied for construction of an immovable property other than plant and machinery, except where it is an input service for further supply of works contract service. So it says works contract services, if it is supplied for construction of immovable property, credit will not be allowed. However, if it is used for plant and machinery, credit will be allowed. What is plant and machinery? We'll see in some time. It says plant and machinery. But if it is used as an input services for further supply of works contract, let's say example, I'm a developer, I'm a works contractor, and if I procure some works contract service from a subcontractor, I will be allowed credit because it is an input service for further supply of works contract, then ITC will be allowed. I'm a developer, I provide works contract service, and if I avail a works contract service, I will be allowed credit. Although provided I am not under the restricted notification where they said for builders, if they take a lower rate of GST, they will not be able to take ITC. Similarly, next entry, I will discuss these two entries in detail together. Clause D says, goods or services or both received by a taxable person for construction of an immovable property. So again, it says, if I receive goods or services for construction, I will not be eligible to claim credit, except again plant or machinery. If you see, the previous clause C said plant and machinery. Clause D says plant or machinery. On his own account, including when such goods are used for the course of furtherance of business. So he said, even though if it is used for business, ITC will not be allowed for construction of immovable property. Example, construction of factory. Let's say example, I'm manufacturing tires. I'm setting up a new factory. So when I'm setting up a factory, let's say the total cost incurred by me is 10 crores. So for setting up the factory, I'm going to run my operations in that factory. I'm getting my factory constructed. I'm going to manufacture tires from that factory. On the factory cost, I will not be able to claim any input tax rate as per this clause. So now we'll discuss this clause C and D in detail. We will discuss various advanced rulings. We will also discuss the judgment of Odisha High Court in case of Safari Retreat, and we'll analyze these two clauses in detail. There's an explanation to this clause C and D. It says, for the purpose of clause C and D, the expression construction includes reconstruction, renovation, addition or alteration or repair to the extent of capitalization. So it says only if it is capitalized in the books, it will be covered under clause C and D. So let's say, for example, you're doing some repair activity in your factory, then it will not be covered under this because that will not be capitalized in your books. To simply say, in very simple terms, if I take into my balance sheet, it is capitalized. If I take into my P&L account, it is not capitalized. So that expense of works contract construction, if it's a repair or renovation, some item, and if I'm taking to a P&L account as an expense or as a repair and maintenance, I will be allowed to credit. If I take into my balance sheet, I will not be allowed credit. So I'm just putting in a simple terms, what does it mean? So ITs and works contract services availed by a software company for construction of their office, the software company cannot claim input tax credit. A works contract company was assigned a contract for construction of office space. So the works, now here the question is for works contractor. The works contractor is constructing an office space. For constructing that office space, they are availing the services of a subcontractor. Then he can avail credit. As I said, he is in that course of furtherance of business. It is an input service for him for further supply of works contract. He can claim ITC. Next question. MRP Limited has paid 3,28,000 rupees to a contractor towards floor repairing charges. In that case, the contractor levied GST on the same, whether this is eligible as I credit, input tax rate. As I said, if this 3,28,000 rupees, in my view, this will be not capitalized because it is a miscellaneous expense. It is a repair and maintenance of the factory. In case of repair and maintenance, it will go as under P&L account and hence ITC will be allowed. But if it goes to balance sheet, ITC will not be available. Now we discuss that if it is for plant and machinery, ITC will be allowed. So let's discuss what is plant and machinery. So it defines as plant and machinery means apparatus, equipment and machinery fixed to earth by foundation or structural support that are used. So if you see, the word here is fixed to earth by foundation or structural support that are used for making outward supply of goods or services or both, and includes foundation or structural support also. But it excludes land building or any other civil structures, telecommunication towers, and pipeline laid outside the factory premises. So telecommunication towers, we have these mobile towers and all, credit will not be allowed. Pipeline laid, if it is inside the factory, ITC will be allowed. But if the pipeline is laid outside the factory, let's say for transportation of gas, let's say the pipeline is laid to the railways for transportation. So pipelines laid inside the factory, credit will be allowed. Pipeline laid outside the factory, credit will not be allowed. It will not be treated as plant and machinery. So to put in a nutshell, if it is foundation or support, structural support, if I'm using works contract construction service for foundation or structural support of plant and machinery, ITC will be allowed. On basis of these theoretical provisions, now we'll go to the intricacies and we'll discuss some advanced rulings and high court judgments. Coming to one of the most interesting high court judgment of Odisha High Court in the case of Safari Retreats Private Limited. So this judgment is being quoted various places, various SSCs, various taxpayers keep discussing about this ruling of High Court. What are the facts? If you see, Safari Retreat is mainly in the business of constructing shopping malls and subsequently letting out to the various tenants. So it said that when we are constructing the shopping mall, input tax rate should be allowed because on this construction of cement, steel, procurement of all these items, because we are using this for further supply. because we are going to charge rent from tenants and we are going to pay for further.
Yeah, so market can make money. Huh? Hello? Hello?
So if you see, um, I hope the slide is visible. So if you see in this case, the question raised was whether ITC is eligible or not eligible. Okay, am I audible? Um, okay, whether I'm audible? Okay, if someone can post in the chat box whether I'm audible. Okay, fine, done. Yes, yes, okay. So it was said that ITC should be allowed because it is used for further supply. So in this case, if you see, it was said, the Orissa High Court said, the purpose of the law is, GST law is to give input tax credit. The purpose of the law itself is to give ITC. So if you see the second paragraph, while considering the provisions of section 17(5)(d), the narrow interpretation, construction of the interpretation put forward by the department is frustrating the very objective of the act. So the High Court said it is frustrating to see that this credit is being blocked because the whole purpose of the law is to give ITC. Various judgments were quoted by the applicant in this case. Various, if you see in the various, this is not the first judgment. Prior to GST also, we had many judgments of high courts also where it was said that construction credit can be availed in some scenarios. So the SSC also had quoted such judgments. So Orissa High Court said, if the wordings of the law specifically prohibits the input tax credit, then if you see in my first paragraph, it says, in that view, the provisions of section 17(5)(d) is to be read down and the narrow restriction as imposed is not required to be accepted. The very purpose of the credit is to give benefit to the SSE. So they said if the wordings of the law does not provide credit, then it has to be read down. So the High Court said credit will be allowed in this scenario. If you see, the department has now appealed to the Supreme Court. The Supreme Court has not stayed this. It is still pending in Supreme Court. So if you see, as on today, this High Court order is operational because it is neither stayed nor any ruling is given in this judgment of Safari Retreat. So as of now, this judgment is operational. But if someone asks my view, if you see the wordings of the way the wordings are given in the section 17(5)(d), ITC will not be eligible. But however, that is my personal view. But however, as the court has said, they have gone beyond that. They have gone based on the constitutional provisions, the 101 amendment, constitutional amendment. Prerogatively based on that, they have said that ITC will be eligible. Now, similar writs are also pending. If you see this, similar to Safari Retreat, there are further writs which are pending at various High Court. I've just quoted a couple of them. DLF Cyber City, Punjab and Haryana High Court, Bamboo Hotel and Global Center, Delhi High Court. So there are further various writs which are pending in various High Courts on the same subject of ITC availment on construction. Next we come to WeWork. Now if you see, next is we come to Appellate Authority for Advanced Ruling in case of WeWork India Management Private Limited. Now if you see, in this case, the appellant procures goods and services from various contractors for fitting out of the workplaces. Because if you see, I will just explain this ruling. See, they are in the business of workspace. So what they do is, I will better read out. The appellant is engaged in the providing shared workspaces or office spaces to the freelancers, startups, etc. So the question was, if you see, what they're doing is they're setting up an office, and if it required, they keep relocating the office. Example, the setup can be detached by them, and the same setup they will use elsewhere to provide this service to various startups. So the question was, since these are movable items, can ITC be availed on these items? So appellate sought an advanced ruling stating this engineered wooden flooring, which is movable in nature, they have capitalized as furniture and fixtures, and they have not added to the cost of the immovable property. So whether ITC can be availed on this wooden flooring, they said it is movable because it was in such a way that it was movable, it can be fixed to a location, and later on it can be detached and it can be fixed at another location also without causing damage. Next question was detachable sliding and stacking glass partition. So the glass partition, if you see, they will fix with nut and bolt, and this can be removed and they can attach it some other property also. So for making partitions, etc., they use those glasses with nuts and bolts, they fix it, and they can detach it also. So the question was, being movable, can input tax credit be availed on these items? So Karnataka Advanced Ruling Authority said, the first case they said ITC will be allowed in case of this wooden flooring. But in case of glasses, they said it will become part of an immovable property, the glass, and ITC will not be allowed. To this, the applicant approached appellate authority for advanced ruling stating ITC should be allowed even in case of the detachable glasses. So appellate authority very welcome judgment. They said ITC will be allowed because what is an immovable property? Immovable property is something which is attached to earth, right? Which cannot be detached. If you see, we have various earlier judgments, even Supreme Court judgment or various High Court judgment in the earlier regime where they have dealt what is an immovable property. So predominantly it was said, if you can detach something, take out something without causing damage to the property, then it does not become part of an immovable property. Let's say example, I fix up something with nut and bolts and I take it out easily without causing damage, then that does not become part of an immovable property. So the applicant also quoted various judgments, and the appellate authority said the glass partitions aren't permanent. They can be dismantled and moved to according to the requirements of the clients of the appellant. Although they are fixed to earth with nuts and bolts, they can be dismantled without demolishing the civil structure. As I said, without causing damage to the property, if I can detach something, then that might not become the part of an immovable property. See, the whole problem is what is an immovable property is not defined in the GST Act. So we have various judgments which we can refer to determine what will become an immovable property, might not become a part of immovable property, because the moment it becomes part of an immovable property, ITC will not be allowed, because we saw the explanation to clause C and D, which said to the extent it is capitalized, ITC will not be eligible. So in this ruling, very welcome move, they said ITC will be eligible in both cases of wooden flooring and glasses, which are movable in nature, which you can move without causing damage. I would prefer people to definitely go through that ruling in detail, because it has been classically discussed why they have allowed ITC. Now, this advanced ruling is in case of Tamil Nadu, Varalakshmi Mahal LLP. This is on the same footing. The facts of the case are almost same to Safari Retreat. Here, the applicant is constructing marriage hall, and they let it out and they pay GST on the output. So they construct marriage hall and they give for rent for 1 day, 2 days for the marriage occasions, and they charge GST. So the question raised was, okay, so I think participants have said that my screen is not visible. 1 second. So I hope whether my slide is now visible. Please let me know whether my slide is now visible. Yeah. So I hope now it is visible. Yeah. So I was discussing this judgment of, yeah. So I just came to next slide, where I'm discussing this Varalakshmi Mahal advanced ruling. So they are constructing marriage hall and they're giving on rent. So they said, can we claim input tax credit because this is used for further supply? Now, the Advanced Ruling Authority, Tamil Nadu, said ITC will not be allowed because as per section 17(5)(d), ITC is not available on such items, and hence they said ITC is not eligible. So if you see, if we go basis safari retreat, then ITC should have been allowed. But although the facts are almost similar, that it was a mall, here it is a marriage hall. But this is not in lines with safari retreat judgment, the conclusion part. Here it said ITC will not be eligible on construction of marriage hall, although that I'm going to let it out and charge GST on the day-to-day rent. Next advanced ruling is case of Tarun Realtors Private Limited. See, why I'm discussing various advanced ruling is, as I said, to give the thought process how the department are interpreting those provisions. Because if you see the works contract construction, there are a lot of litigations. Many provisions are not clear. Many we have series of litigations in the earlier regime also. So it becomes very important for us to go in detail and dwell upon the various provisions surrounding around this works contract and construction. In case of Tarun Realtors, the question raised was they are into construction of malls. Now that question was not on the construction part. They said, can we avail input tax credit on chillers, air conditioners, air conditioner unit, escalator, lift, CCTV sets, generator, furniture fixtures? So the question was, can we avail input tax credit on these items? Their point was, their submission was, can we claim credit because this comes under plant or machinery? Because I said you 17(5)(d) uses the word plant or machinery, which is not defined in the GST Act. GST Act only defines what is plant and machinery. I repeat, GST law defines only what is plant and machinery. It does not define what is plant or machinery. So they said in the absence of the definition, we have to see the general meaning of what is plant and what is machinery. So they said, seeing the general word of plant or machinery, this lift, generator, surveillance system, CCTV will all fall under the definition of either plant or machinery as per the general law, and ITC should be allowed. So their point was not from the construction. Their submission was from the perspective of plant and machinery, plant or machinery, stating ITC should be allowed. Now, however, if you see in this, the ruling said these items are not part of plant or machinery. This is only the law has to be read intentionally, with the intention of the law is to be treat plant or machinery also as plant and machinery. And they said ITC will not be eligible because these are not fixed to earth. So they said ITC will not be eligible in such cases. My personal view, if you ask me what my personal view is, if you see here is, we have various judgments in the income tax law also, Supreme Court judgments also, where they've addressed what is plant, because the rate of depreciation differs in case of building and in case of plant. So we have judgments in the income tax law also, in the earlier Senate credit rules also. So in the judgments have been held that generator, these becomes part of plant. So in that case, if you see, if you go with the earlier judgments, these can become a part of plant also, and ITC can be made available. So the plant or machinery becomes a very important point. But however, we are definitely going to have a lot of litigations in this plant and machinery or plant or machinery. But as I said, in my humble view, in my personal view, ITC should be available on some of the items which we can actually categorize them as plant or machinery, example generator, etc. But as I said, it is my personal view. No doubt we will definitely have a lot of litigations on this in future. Already we have multiple adverse advanced rulings on these subjects, where different views are being taken by the different advanced ruling authorities. Next is, if you see, next entry is goods lost, stolen, destroyed, or written off. So probably we will close in another 5 minutes. We are almost coming to the close of our presentation. I know it is exceeded the time, but anyways, I think let's complete this, because I'm trying to cover majority of the provisions and trying to get in detail of those provisions. So here this entry says goods lost, stolen, destroyed, or written off, or disposed of by way of gift or free samples, input tax rate cannot be claimed. Now, what is this stolen, destroyed, written off, gifts, samples, etc. cannot be claimed? Now, if you see one question, goods Now, if you see inputs purchased and in the process of manufacturing, there is manufacturing loss, there is evaporation loss, there is process loss. So, should input tax rate on input credit be reversed on inputs? My question is, I purchase raw materials, I manufacture products. So, in the process of manufacture, there is evaporation loss, or let's say there is process loss, or there is manufacturing loss. My question is, should input tax rate be reversed on ITC availed on raw materials purchase? Should ITC be reversed? Now, if you see my humble view, I will say, in my view, ITC should not be reversed, provided it is a normal business loss. If it's an abnormal loss, then it's a different question. But if it's a normal loss, business loss, sorry, the process loss, evaporation loss, ITC should not be reversed. We have multiple high court judgments in the earliest regime where they have said process loss credit need not be reversed because the inputs have been put to manufacture, and hence ITC cannot be claimed reversed, need not be reversed if during the process of manufacture there is some process loss or evaporation loss or manufacturing loss. So we have multiple judgments in the earlier regime where they have said in such cases input tax credit need not be reversed. I will even quote a recent judgment in case of High Court in case of Tamil Nadu sales tax under that provisions. I will discuss the judgment also in some time. Now, let's say during COVID-19, some of the products might get expired. Some of the products might get expired. FMCG industry, because of no less sales, close out of shops, a lot of products might get expired. A lot of products might be destroyed. In that case, ITC has to be reversed. ITC has to be reversed. No doubt, ITC has to be reversed. What is return off? Does return off includes partial return off? I repeat, return off means full return off or partial return off. In my view, it should be fully return off here because if you see the word preceding words stolen, destroyed, generally these are fully it does not exist at all. After something is stolen, after something is destroyed, it does not exist. So there are court judgments to say when we are reading a word, we have to read along with the preceding words. So based on that logic, it should be fully written off in my view. So example, a product, let's say I'm selling for a lesser value, a scrap value, and charging GST. In that case, ITC need not be reversed because I'm paying GST on the output sales, although at a lesser value. So written off, in my case, in my view, if it is fully written off, definitely ITC has to be reversed. What is gift or free sample? Now, many times question raised, let's say example, I say my dealer, if you achieve, let's say a target of 60,000 metric tons, I'm going to give you so and so gifts. So in that case, whether ITC is to be reversed. So we have a famous advance ruling in case of Sanofi, in case of Maharashtra advance ruling, where Sanofi was into pharmaceutical products. They used to give a lot of promotional items, gifts to their customers or doctors or the dealers, their customers. So question was whether ITC has to be reversed. The ruling said ITC has to be reversed. My view here, if you see, is let's say what is gift. Gift is not defined in the GST Act, but what it is defined in the Transfer of Property Act. So let's see what it says. It says gift is a transfer of certain existing movable or immovable property made voluntarily. I repeat, made voluntary without consideration by one person called the donor to another called donee. So two important words: without, it is made voluntary and without consideration. So if you see, if I'm doing something voluntary and without consideration, that becomes a gift. And when I have my contractual term says, when you achieve so and so target, I'm going to give you so and so items as gift, then it is not voluntary. It is as per my contractual obligation. And hence a view can be taken that ITC can be availed in such gift. But if you see normal gifts like during Diwali, I procure, let's say, some gifts and I distribute to my customers and dealers. In that case, in my view, ITC will not be eligible because it is voluntary given. Gifts are being given to customers. ITC cannot be claimed in those scenarios. However, if something is given as free samples, let's say pharmaceutical companies giving free samples to their customers, ITC has to be definitely reversed in those scenarios. Buy one, get one free. In case of buy one, get one free, should I reverse input tax credit? So for that, we have a circular number 92/11/2019 dated 7th March 2019. It was said, when I'm having 1+1 scheme, it is not free, but the cost of the second product is imbibed, is included in the first product itself. So in case of 1+1, ITC need not be reversed. It was dealt in detail in this circular dated 7th March 2019. Next question, what about CSR expenditure? If you see, due to this COVID-19 pandemic, many companies are incurring COVID-19 CSR expenditure. They're distributing gloves, sanitizers. So on the procurement of sanitizers, gloves, can I avail input tax credit if I'm distributing free as part of my CSR? So if you see, again, if we go as per the gift says voluntary. Here CSR, I'm not doing voluntary. It is compelled by me as per law. The law compels me to expend CSR activity. So one view is ITC should be allowed in case of CSR expenditure. So in my view also, CSR expenditure credit should be allowed. It should not get blocked under section 17(5). Although we might have some difficulty under schedule 1, but discussing about 17(5), in my view, personal view, although no doubt it will have a lot of litigations in future, my personal view is in CSR, in that case, ITC should be allowed. Almost we are coming to the end of our presentation. In this advanced ruling, if you see, the company was sending the products for testing, and these testing products were destroyed. Advanced ruling authority said ITC need not be reversed because these are put to the test of manufacturing. Once these are put to the test of manufacturing, then ITC need not be reversed in such scenario. I repeat, the goods are put to manufacturing, and after testing, if the goods are destroyed, it becomes an inherent part of manufacture used in the course of furtherance of business. Since these are put already to the test of manufacture, ITC should be allowed in such scenario. In that case, it said inputs cannot be considered to have been destroyed. Now, this is a recent High Court judgment in case of Madras High Court, which was sales tax regime. It said invisible loss during the course of manufacture, ITC need not be reversed. If it's an invisible loss of input in the course or course of manufacture of the final product, for the invisible loss which is caused during the process of manufacturing, ITC need not be reversed. This was in the case of Madras High Court, in the case of GBR Metals. Next, goods or services used for personal consumption. If it is a personal example, if you see mask, sanitizers, used by employees in the companies, in the offices. In my view, this is not personal consumption, because personal consumption, let's say, I gift a mobile phone to my employee or laptop to him, which is used for personal purpose. It is for personal consumption. But during the course of furtherance of business, I am asking him to use mask or sanitizer because of this pandemic, and all the more it is being mandated by MHA. In that case, this will not be treated as personal consumption, and in this case of mask sanitizers, ITC should be allowed. So that's it. With this, we come to the end of our presentation. Thank you all for joining. I have briefly tried to cover all the provisions. Tomorrow we have a webinar on another topic, which is cross-charge head office branches, multiple state transactions, state to state, and one registration to another registration, employer-employee transactions, employee recoveries, what is the impact of GST. So we'll be discussing that. So friends, thank you for joining today. Thanks for watching. Thank you.